We knew they were getting an outlook today. I'm not sure we knew it was this one. In fairness, Larry Culp had signaled it might be in the negative territory.
Yeah, just last week he had said at a conference that it would be negative. So he definitely had prepared people, although negative $2 billion compares to where consensus was, which was over $3 billion. So that's a pretty large swing, and I think you're seeing that in the stock today.
Well, isn't even the range they gave a pretty big swing? Because as I understand, it's -2 to break even. That's a $2 billion swing. We're a quarter of the way into the year.
That's real money.
Yeah.
Shouldn't they have a better arms around how much it's going to be?
Yeah, totally. To my checking account, that's a lot of real money. But what I would say is that, you know, a big issue with General Electric is in the power business where you get what are called advanced payments. And those can be very lumpy and big swing and seasonal. That has to do with construction of power plants. And so I can understand why it would be such a dramatic variance between the high and the low end.
How many more Band-Aids does GE need to rip off now?
Well, I don't really think it's Band-Aids. I think what they have done very aggressively is attack the balance sheet liabilities and a liquidity spot. Going forward, if we're looking about like the second half of 2019 and 2020, it's all about the right-hand side of the balance sheet. It's taking those assets that they have and generating more cash out of it. And that's going to really come from the power unit and from the renewables businesses where they have to get more profitability.
As far as we know, Joel, have they ring-fenced, as we would say, the financial part of it? Because that's been a big question for them.
It has.
Do you know there's nothing more coming there?
We don't, and that's always a risk with them. They did have a presentation last week on their insurance business to try to highlight what the potential risks are. But, you know, with the case of any sort of financial, that is a risk that will remain with GE for some time. So
this year, they say it's between -2 billion and zero on the cash flow. What about the projections going forward? Are those more reassuring?
Well, you know, as a credit person, I think it may not be enough. And what I would say is if you look at what folks like S&P or Moody's or Fitch might have said, the numbers that they've given today might lead to rating activity. I wouldn't be surprised to see at least a negative outlook, if not a credit watch listing on the company, given their goals. For 2020, it sounds like they're doing the right thing, and I believe Larry Culp is trying to do the right thing and getting his liquidity and balance sheet in place, but it goes back to getting the more profitability out of the assets. That's what it's all about.